Welcome back, YouTube community. Gabe here. Last time, we talked about your YouTube business and capital stock and bond investing. This is a special topics video on the Pandemic Relief Acts passed by the 116th Congress in 2020. In this video we will discuss the taxable effects of the federal pandemic unemployment benefits paid to individuals. Shall we begin? In early March of 2020, the United States came to terms with the worldwide coronavirus pandemic. Efforts were made on a state-by-state basis to address the pandemic. Before long, shutdown measures spread across the United States, closing businesses and mandating stay-at-home measures. The loss of income by businesses and families was swift and damaging. Congress acted just as swiftly. The Coronavirus Aid, Relief, and Economic Security, commonly known as the CARES Act, was passed by Congress with overwhelming, bipartisan support and signed into law by President Trump on March 27, 2020. The $2.2 trillion economic stimulus bill included provisions to help companies with forgivable loans to small businesses and low-interest loans to corporations. Additionally, $300 billion in one-time cash payments were made directly to families. $1,200 payments to individuals, and $2,400 payments to couples went out within weeks. An additional $500 was granted for each eligible child under the age of 17. $260 billion was set aside to increase federal unemployment benefits. On December 27, 2020, President Trump signed the Consolidated Appropriations Act of 2021. The coronavirus relief portion of that act added $166 billion for $600 stimulus checks, and $120 billion for an extension of the federal unemployment benefits. Federal unemployment benefits are administered by the individual state unemployment agencies. Here is how unemployment received through the CARES and subsequent act will affect taxpayer income. The CARES Act established three special levels of federal unemployment assistance. The Federal Pandemic Unemployment Compensation, also known as the FPUC, provided an additional $600 per week for those receiving unemployment benefits, in addition to the amount allotted by the specific state. The additional amount was available from the date the CARES Act was enacted, March 27, 2020, through July 26, 2020. The Pandemic Emergency Unemployment Compensation, also known as the PEUC, provided an additional 13 weeks for those who have otherwise exhausted unemployment benefits. The Pandemic Unemployment Assistance, also known as the PUA, is a type of unemployment insurance with broader eligibility guidelines. The eligibility included any individual who is out of work due to the pandemic, including formerly self-employed, contract, and gig workers. This is a very important addition. Many self-employed business owners who otherwise never qualified for unemployment compensation were allowed to file and receive benefits. The CARES Act also made special provisions for non-business entities. As a part of the federal unemployment aid, it provided reimbursements to self-insured nonprofit organizations, government agencies, and Indian tribes for 50% of unemployment benefit payments paid to states, through December 31, 2020. This federal unemployment boost may be a surprise come tax time. By law, unemployment compensation is taxable and must be reported on a federal income tax return. Taxable benefits include any of the special unemployment compensation authorized under the CARES Act of March and extended in December. In January, unemployment benefit recipients should receive a Form 1099-G for certain government payments from the agency paying the benefits. The form will show the amount of unemployment compensation they received during the tax year in Box 1, and any federal income tax withheld in Box 4. Taxpayers must report this information, along with their W-2 income, on their federal tax return. With millions of Americans now receiving taxable unemployment compensation, many of them for the first time, it is possible that they did not have enough taxes withheld from the unemployment benefits payments that will be added to their income. Withholding is voluntary. Federal law allows any recipient to choose to have a flat 10% withheld from their benefits to cover part or all of their tax liability. With the December 2020 extension of unemployment benefits passed by Congress, it is possible to make the necessary withholding adjustments for the coming year. To do that, fill out Form W-4-V, Voluntary Withholding Request, and give it to the state unemployment agency paying the benefits. Don't send it to the IRS. If the state agency paying unemployment benefits has its own withholding request form, use it instead. If a taxpayer received unemployment compensation and did not withhold taxes for any given tax year, they can still make a quarterly estimated tax payment by January 15th of the subsequent year, for the prior tax year. For example, you may pay your fourth quarter estimated tax for the tax year 2020 by January 15, 2021. Quarterly estimated tax payments are normally due April 15, June 15, September 15, and January 15 of the subsequent year respectively. Taxpayers can use Form 1040-ES to make estimated tax payments. With unemployment benefits extended into the new tax year, taxpayers can use the IRS tax withholding estimator to make sure they are having enough tax taken out of their pay for the current year. This online tool can help any worker or pension recipient avoid or lessen their year-end tax bill or estimate the refund they want. The IRS tax withholding estimator is located on the irs.gov website. Please refer to IRS Publication 525 for information on taxable income including unemployment benefits. Please refer to IRS Publication 505 for information on withholding taxes and estimated tax payments. In summary, the CARES Act, and its extension, created many provisions to help workers and families during the coronavirus pandemic. Many self-employed workers were able to receive unemployment benefits for the first time. That boost may have been a surprise. Some workers might not have taken out the necessary tax withholding. It is possible to make quarterly payments toward your estimated taxes, the final being due January 15th of the year subsequent to the tax year in question. With the extension of unemployment benefits into the new year, it may be best to use the IRS tax withholding estimator on the irs.gov website, and have voluntary withholding taken out of benefits received. Please use this information for educational purposes. Consult your tax professional, investment advisor, or attorney for further guidance in your specific situation. Please leave any questions in the comments section below. Let me know if there is a subject you would like to see a video on in the coming weeks. Please like and subscribe with a click to the thumbs up below. Have a great week. See you next time with more tips for your YouTube business. Cheers.